SoFi stock is up over 86% here in 2025. And of course, I'm happy about that. I was recommending SoFi stock early in the year since January until it was up about 85%. SoFi stock has been one of my best stock picks here in 2025. But already investors are asking me about 2026. Where do I think SoFi stock will be by the end of next year? That's precisely the question I'm going to answer in this video. I'm going to look at some data, some information, some estimates, and make some calculations and present to you some scenario analysis of where I think SoFi stock price could go by the end of next year. So let's jump in and take a look. So one of the pieces of information I need to make this stock price prediction is SoFi's earnings per share estimate for 2027, because I'm going to use the forward 1-year price to earnings ratio in conjunction with that earnings per share estimate to create some scenarios of where I think the price could be. Speaking of data, Fiscal.ai is my preferred data source, and they are the sponsor of this video. They aggregate tons of financial information, and they save me tremendous amounts of time conducting all the research. They also have information available exclusively from Fiscal.ai, not available anywhere else. If you're interested in their service, there's a link in the description. You'll get a discount for using my link. So speaking of the earnings per share estimate, the analysts on Wall Street that are following SoFi stock expect the company to deliver 76 cents in earnings per share in December for the fiscal year that's ending in December 2027. I also need the company's forward price to earnings ratio. And again, Fiscal.ai has the charts providing these ratios. SoFi's forward price to earnings ratio is at 65.81 to be precise, near the higher end of where this stock has traded for according to this valuation metric, going all the way back to January of 2024, when the company's earnings per share estimates became more stable, when the company started generating positive earnings per share more consistently, and management has now forecast robust increases in expectations for earnings per share for the next several years as the company is getting that nice 1-2 punch. The lending segment is performing well, and the technology and financial services segment are also increasing nicely. All right, so now that we have the numbers we need, we can jump into my scenario analysis for SoFi stock. So I've presented you with 4 different scenarios, keeping the earnings per share estimate for 2027 constant and adjusting the forward price to earnings ratio to suggest what I believe will happen with SoFi's forward PE ratio, which I think will decline given how high the stock is trading on a forward PE basis and compared to other companies that are in similar business operations and their forward PE multiples. SoFi still, even though it wants to be more of a financial services and technology services business, still generates roughly half their revenue from the lending segment and more of their profits from the lending segment, given some of the other segments are not yet as profitable. So I think SoFi's forward PE multiple will trend downward over the next year. However, if it stays the same and it doesn't move downward and it makes progress hitting its earnings per share estimates, then the stock price could rise all the way to $50 by the end of next year. That would be a nice return from the current share price of a little over or a little under $29. However, unfortunately, I don't think that's the most likely scenario. I think the most likely scenario is SoFi's forward PE multiple declines. If it declines to 60, then the share price will still rise, but less so, to $46 per share. If the forward PE multiple declines to 55, then the share price will still rise, but to $42 per share. And if the forward PE multiple falls to 45, the stock price again will rise, but closer to $34 per share. As you notice here, all of the scenarios I evaluated have SoFi stock price increasing next year, but that doesn't mean that's the only case or that's the only thing I think will happen. There are scenarios where SoFi stock price could fall much more than where it is today, but that scenario I think is less likely. The 4 scenarios I've highlighted here are the scenarios that I see as the most likely scenarios for SoFi stock next year. There are dozens and infinite amounts of scenarios that could play out, but these are just some of the most likely scenarios that I estimate for SoFi stock next year. Some of the big factors for SoFi next year will be, most importantly, a Federal Reserve that's moving interest rates lower. I expect that will continue next year. First of all, the current Federal Reserve Chairman Jerome Powell is decreasing interest rates, already indicating that there will likely be two more interest rate cuts here in 2025. And then the President Donald Trump and his administration have signaled that they're looking for a new Federal Reserve Chairman, and the administration would strongly favor whoever they put in that role to be a person that wants to cut interest rates more. They want lower interest rates because the United States government is paying significant sums of money in interest expenses. They feel that if the Federal Reserve lowers interest rates, they can refinance the United States debt at a lower interest rate and thereby lower the interest payments that the United States has to pay. Now, it's more complicated than that, but they've been selling that as the reason why they want to replace the chairman and have someone in there that wants lower interest rates. Regardless of what the president and his advisors want, the central bank is likely to lower interest rates anyways because the economy in the United States is slowing down. We didn't get our jobs numbers because the government was shut down here in October, but the previous report was not very strong and the revisions were even worse. And I suspect when or if we get the jobs number for October, it will show that numbers are down or trending downward. And I think that will persist going forward because of several factors, most notably the increase in trade barriers. The tariffs the United States has placed on all of its trading partners is causing a slowdown worldwide and a slowdown in the United States as enterprises have hit the pause button on hiring new people. They're keeping existing people on board as long as they can, but they're not hiring very many new individuals. So that's hurting the market. And so the central bank, one of their goals is to keep unemployment as low as possible. And so they will be decreasing interest rates to try and increase economic activity. And so SoFi will benefit because SoFi is in the lending business. And when interest rates are lower, more people are interested in purchasing products that require financing, such as a home loan or a car loan, or even maybe refinancing your student loan if you previously had it at higher interest rates and now that interest rates move lower, you can refinance at a lower rate. So that's one factor that will cause, I think, SoFi's business to improve next year. On the downside, I mentioned the economy is slowing down. When the economy is slowing down, people are losing their jobs. When people are losing their jobs, they can't make all of their payment obligations and they might miss and default on some loans. And that's bad news for SoFi. It's especially bad news for SoFi because by far the largest percentage of loans in its portfolio are personal loans, which are the riskiest type of loans. That's the first thing that consumers default when they face hard times. So those are the offsetting factors for SoFi stock next year. And I think the slowdown of the economy will be a stronger negative force than the decrease in interest rates will be a positive force for SoFi next year if the slowdown in economic growth continues. So all that being said, where do I see SoFi stock by the end of next year? Well, I still think SoFi stock is most likely to move higher, but with substantial risk. And so I see the share price rising to between $35 a share and $40 per share by the end of next year. But this is going to come with significant risk. The downside could be much more, and the upside could also be much more. It's a high risk, high reward type situation for SoFi stock investors next year. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.